Welcome to CX Talks Fintech Virtual Fireside Chat. I'm your host, Alex C. The fintech industry is facing a multitude of vital challenges, from regulations, security, and data privacy, the emergence of new tech, new customer behaviors, and more. Today, we're talking about the critical intersection of fintech and customer experience with our guest speaker, Nikos Theodorou, Director of Payments at Remote, and our moderator, Lucas Turcomanis, CX Consultant at New Sage Ventures. Let's start the conversation on disrupting fintech.
Hello, everyone, and welcome to another CX Talks Fireside Chat Fintech edition, where we discuss all things fintech. I am joined today by Nikos Theodorou, Senior Director of Payments at Remote. Nico, thank you very much for your time and welcome.
Thank you, Luca. It's a pleasure to be here and excited for our conversation.
Yeah, thank you. Before we start, why don't you give us a quick intro of yourself and what you do?
Definitely. So my name is Nikos Theodorou, like you said. I'm originally from Greece, but now live in San Francisco. I'm the Senior Director of Payments at Remote. I've been with the company for about a year, and I lead all aspects of payments there, which is partnerships, operations, strategy development, product development, so on and so forth. Prior to Remote, I was with eBay for about 3 years, where I led cross-border payments as eBay transitioned away from PayPal and into the in-house managed payment solution. I think most people are going to be familiar with eBay, so I'll just talk about Remote for a quick second for those that are not familiar with the company. Remote is a company that empowers and allows other companies to hire, manage, pay employees and contractors around the world. We have three primary products, one that's called Employer of Record, one for contractors, and one for global payroll. And all of those, again, are about allowing companies to manage international workforce. In the EOR, or Employer of Record model, we essentially hire folks through our local entities in 70 plus countries. And then for the contractors, we allow our customers, which are corporates, to manage and pay contractors in 150 countries. So my background is generally in two-sided marketplaces where you have to think about both the pay-ins and the payouts, though with slightly different context between my current job at Remote and what I did before when I was at eBay.
Thank you so much for that. It's a great timing as well in the market for a service like that. A lot of people are trying to go remote. Um, so, um, Speaking of which, we did a study recently, and we found that many fintech leaders around the world, with in different size companies, um, they have different challenges and different things on their mind. Obviously, this is a challenging environment that we are in right now. 2022 was not very friendly to fintechs and to the market in general, and 2023 is here with us. So, with that in mind, what's top of mind for you in the year ahead? What kind of challenges will remain from the last year, and what new adventures should we await for in the year ahead?
Definitely. And it's a good way to start the conversation. I think the trends that we're going to see throughout 2023 are going to be very similar to what we have seen over the past few years. Payments are becoming more and more defiant of borders. They're becoming global. And that's really following, like you said, what the e-commerce landscape, the economy, and just employment is, what those kind of industries are going in general. Everything's becoming more global, and payments have to follow that trend. We're moving away from pure domestic marketplaces, purely domestic models, to truly globalized payments that thrive on basically just ensuring cross-border payments run smoothly. With that in mind, there's a couple of major elements to keep in mind as we think about globalized payments and cross-border payments. There is the regulatory aspect. There is the localization of those payments. And lastly, there is another underlying layer, which I always find companies face difficulties, which is how you bring all of this together internally and reconcile the different payments that are going on. So let's unpack each one of them a little bit more, starting with the regulatory piece. Payments as an industry is a very heavily regulated space. There's different perspectives around the world in terms of how innovation is driven. For example, in Europe, in many ways, innovation is driven through regulation, with initiatives like PSD2 that the European Union introduced a few years ago. But the truth remains that when someone wants to engage in payments, they have to keep in mind that it is a very heavily regulated space, and there's no uniform regulation around the world. There's different ways that a US regulator versus a European regulator versus a Singaporean regulator approaches payments, and what are the standards that they want the companies that engage in money movement activity to follow. Now, for someone that, again, is entering the space and how you want to grow it, that's really where the challenges come into play. How do you adhere to all the different local requirements? Do you go and build something by yourself? Do you partner with somebody? And how do you make sure that you remain compliant as you grow your payment footprint and your payment product? With payments, this following saying is very true. It is very easy to go live. It is very difficult to remain live in the market, especially when it comes to regulation and ensuring that you have the right tools in place to adhere to all the different regulations that exist globally. Taking the next topic now around localization of payments, this is true for both if we think about a two-sided marketplace, there's always the money coming in and there's the money going out. And for both of this, the overall theme and trend are very similar. You want to keep it very relevant for the person that is either trying to pay into the marketplace or for the recipient of the marketplace into their country. When it comes to money coming in, it's very much about understanding, as you want to grow your global footprint, about what are some of the must-haves that customers in different countries want. At Remote right now, for example, we have customers in 80 plus countries, and not everybody wants to pay us in a similar way. There's, of course, direct debit, there's card products, but there's buy now, pay later products. But every country has their own nuanced ways that they process payments. And if you don't offer locally relevant methods, then you're not going to be able to attract customers that are in that given country if they're not able to pay you with the means that they so desire. Similarly, on the money going out space, it's my experience, it's more about offering choice to the recipients. And I'll give you two examples from both Remote and eBay. At Remote, when it comes to paying contractors on the platform, what contractors want is typically choice. Some contractors want to be paid in their local currency. Some want to be paid in a major currency, in a wallet like PayPal, Payoneer, or there's a whole suite of wallets in the market at the moment. And some want to be able to be paid as quickly as possible. Some want to be able to hold balances on the platform. And in order to do that, really, you need to keep in mind about how you can offer choice to those that are going to be paid from your platform. The same was true when I was at eBay. At eBay, we had, of course, buyers paying us, and then we had to pay the eBay's 15 million sellers out in something that in a wallet or an instrument that was relevant to where they live. And again, there's different preferences depending on the markets. There was a big cluster of Chinese sellers on the eBay platform. And exactly because they were doing a lot of business overseas and selling into the US, the European Union, the UK, and Canada, they always preferred to be paid in a major currency and not in Chinese yuan in a local bank account. On the flip side, if you're pushing money to a US seller, they typically want to be paid in US dollars in the local bank account as quickly as possible. And this is just an example to show that really the challenge when it comes to two-sided marketplace is about ensuring how you can offer the most relevant methods around the world to basically meet your customers where they are and make it easy for them to engage with you. Because payments, at the end of the day, are an enabler. They are there to support a broader ecosystem. And if you don't make payments easy, then you're not going to have success with bringing customers and retaining customers on your platform. The last thing I want to touch upon real briefly is if we think about global marketplaces and global platforms that engage in multiple currencies, a challenge that I've seen throughout my current company, my previous company, and a few other fintechs is how do you bring everything together from a reconciliation perspective? As I mentioned before, you might be paying folks in multiple different currencies. There's always a challenge about the internal infrastructure, about bringing everything together, making sure your accounting, tax, billing systems all speak to each other so that you can reconcile your activities and your operations in a way that does not cause mayhem to the internal teams. That is definitely more a little bit on the finance and accounting space, but I think it's definitely worth mentioning as it is a byproduct of payments going global and basically payments define borders as we move ahead.
It's interesting you mentioned on the money outside on your contractors part. You mentioned that what they want is choice. And in an environment like today where we see really high inflation, and especially in some countries you have hyperinflation like Argentina or Turkey, it's very relevant for someone to hold, a very sensitive financial part
Exactly.
like their salary in a different currency that gives them much higher buying power in their local market.
Yeah, and this is
And
something that we have seen at Remote, for example. And you mentioned Argentina. One of the biggest asks from our customers was to enable salaries in non-local currencies for countries like Argentina, like Turkey, where local employees want to be paid in a major currency so they can be shielded a little bit from the volatility of the local currency. So this is very much a relevant case, even for salary disbursements today.
yeah, I want to drill a little bit deeper into the localization part that you mentioned. And you correctly said that there's no unifying protocol right now across the different countries and as a global standard in terms of the the regulation and the localization needs. So what kind of best practice have you seen for companies that are trying to crack that when it comes to like scaling and launching in new markets that have very different regulatory policies than others?
Yeah, definitely. And the question that it comes down to is the age-old question when it comes to developing a product: are you building or are you buying? And when it comes to payments, I often find that you need to identify where your basically major markets are, understand whether it makes sense for you to go and get licensed in those markets, and then partner with somebody that is very strong in some of the longer tail markets that you're servicing. Let me elaborate on that a little bit more. Getting a license, payments license, and maintaining it is a very difficult process, right? It's just a cumbersome process that not everybody wants to go through, which is why companies like Stripe and Adyen became the giants that they are today, because they take that pain away from the companies that want to enter a market. Of course, there's always the risk that at some point you're going to outgrow what those companies can do, or you're going to need more nuances in the product you offer, and that's really where you have to think if we're going to build it yourself or you're going to buy it. At Remote, for example, when we think about our contractor products, we focus on two things. One is where are our customers located, and two, what kind of currencies do our contractors want to be paid in? And this kind of optimization is what should help companies understand how they should approach building or buying a product. Once you identify where the majority of your customers are, what countries they're in, you can do an assessment of pros and cons. Does it make sense for me to go after my own licensing? What are the longer term benefits for that? But the answer almost always is going to be partner first. Make sure you have some core infrastructure in place. You understand what it means to intermediate payments, to facilitate payments. And then once you partner with someone that is right for you, figure out if you want to graduate from a partner and go do it yourself. You obviously, once you do it yourself, you have more freedoms in terms of what are some of the products you can offer, what are some of the services you can offer. But that is definitely a secondary step in my mind. The first step is always to find the right partner that works for you and the customers. Now, how you identify that is again a mapping exercise for what your customers want and what they need. There is a very, very large kind of spectrum in the different flavors that payments companies offer today. There are some that specialize in the types of acquiring or the types of pay-in methods that they offer. There are payment orchestration layers that do that, right? And then there's other companies that are more on the pay outside, on the wallet side, that specialize in offering local payments into as many countries as possible to eliminate wires. So really, it's about understanding what your customers want and what you as a company are you trying to optimize for, and then have kind of very clear 3, 1, 2, 3, 4 criteria before you go out into the market and find who the right partner is for you. So again, start with a partner, identify what's important for you. Once you launch with a partner and you have enough demand, you want to offer a little bit more than what the partner can do, then you can think about graduating and into your major markets, go after a payments license, and basically starting building things your own way. If that makes sense.
Yeah, and it's something consistent that came up with our other fireside chat, where essentially the takeaway was if you're trying to if you're trying to expand and go into these markets where you don't really have that expertise, it's better to lean on infra players that can help you, and take away
Definitely.
all of that regulatory noise and all of the pain that comes with to figure out how to do it. Rely on those partners and then focus on what's core for your business and for your growth, unless
Exactly.
what you're trying to build is actually what these players are also providing, in
Of
which case
course, of
go and
course.
do the hard thing your own way, right?
And that is a very interesting case. If you're building a payments provider, then yes, what your value proposition is to your customers is exactly that you are licensed. And we've seen that in a boom in the European economic area over the past few years, that you have a large number of companies like Modular, Solaris, Rails, Rapid, that are all licensed in the European economic area. So they went through the trouble of getting their own licenses, of ensuring they have the right certifications, the right KYC programs. And then what they offer to their customers is, hey, I can spin up a bank account for your customers very quickly. I can spin up payment flows for you very quickly and very easily. You just rely on my own infrastructure. And you're absolutely right. If that's what you're trying to do, then there's only one way you can do it. You get your license, you build the infrastructure off of that, and then that's what you sell to the customers. If you're not trying to build a payments company, a payment infrastructure company, then I think that the first step should be partnering with that one, and then deciding if you want to go down that path or not.
Speaking of regulation, it came up a lot as a theme in our research because it's something that it does affect companies in the fintech space quite a lot. But there's also an opportunity to work through that in a creative way, right? Naturally speaking, this industry has, because of the regulation, has a lot of friction points that when it comes to the users, the customers, and the company itself, these are necessary steps you need to make sure you have in order to protect your users. So you have processes like KYC, KYB, data security, regulatory compliance, fraud detection. All of these things are difficult and hard and create a lot of friction. So with your experience from eBay and from remote, uh, are there any best practices you can share in terms of improving the overall user experience while also, staying true to those regulatory needs that create that kind of friction?
Yeah, definitely. And that is always a friction point and will always be a pain point for those who are involved in the payments industry. What you have to keep in mind is that even if you rely on a partner to do KYC, when it comes to money movement, someone has to do it. It's not something that you can park, that you can do never. Someone has to do it. And that's where someone is really that holds a lot of the kind of best practices there. Let's take the example that you're working with a partner for some of your money movement activities. What you need to figure out is where in your customer journey and where in your flow does it make sense to actually put the friction point for the end user to make it either the least inconvenient possible or put it in a way that the end user has an incentive to actually go through the KYC process because there's something waiting for them on the other side. For example, on the remote platform, we allow customers to kind of take a look, try to hire folks, take a look at how the payslip creation is. But when they actually try to create a contract and hire somebody, that's when we put KYB, which means that once you've explored the platform, you know what you can do, and you have an incentive to go and hire somebody, that's where you're actually going to go and go through the KYB process. Similarly, with when I was at eBay, in many ways we allow sellers to sell on the platform, and then once they sold an item, that's when they would have to have KYC completed for them to receive funds from the platform. So once you add that incentive, it becomes much less of a friction point and more of a, okay, let me get this done so I can have access to the money or access to a product that I actually want and need. So you don't put it at the beginning where it's a little bit more of this is a nuance. I don't think I really want to go through this. And you put it in a play that is after you've created value for the end user, and that's where they want to actually go through the product. Now, beyond the incentives piece, there are other elements like making KYC progressive. Now, what that means is that depending on the regulation, you don't actually have to check for everything that for all the different documents that the regulation requires when someone is onboarding. There's different thresholds for when you need to ask certain documents. And that's the way, again, you can set up your KYC process. When we've had sellers at eBay that sold up to $500 or $1,000 a year, which doesn't sound like much, but that's what you and me would sell on the platform. We actually don't have to go through the whole set of 5 documents that the European Union requires a seller to provide, because the threshold is 3 or 5,000 euros or whatever it is. So making that progressive and only asking for documents when different thresholds are met is another easy and sleek way of basically eliminating a lot of the friction at the beginning. And lastly, another interesting one is finding a way to ask your customers for the minimum amount of information possible and augmenting what they give you with what's available in either public databases or any other risk tools that you use. There's a lot of databases out there that contain customer or companies' registrations or licenses or information about when they were founded, who the directors of the ultimate beneficial owners are, and which is a lot of the data that regulators require you to know, understand, and check when you go through your KYC or KYB processes. Now, the fact that data exists and you can access it means that you can ask for less information from your customer when they're actually going through the KYB process. You can ask for 2 data points and then augment that with the 3 other data points you need for your KYB process through databases like LexisNexis in the US that holds a lot of information on companies and individuals. So, to summarize, incentives, progressive KYC, and finally, augmenting the information that you have based on what's available to make sure that the KYC or KYB entity gives the minimum amount of information possible. Now, with all that, KYC or KYB is always going to be a friction point. Like I said before, this is just a few ways that you can kind of massage the process to make it a little bit easier for those who are involved.
Yeah, I love the progressive KYC one, especially on the example you gave. If I'm only selling like a couple $100 worth of merchandise, why do I need to give all this documentation? Let me, provide all that information once I reach
Exactly,
that
exactly.
threshold. So that makes sense. In terms of the database, the augmentation in terms of the additional data points you find for companies, is that list accurate, or do you need to verify any of that with your?
It
clients?
depends, which is not the answer you probably want to hear, but no database is perfect, right? At Remote, we're testing different ways because at Remote, given the volumes that we do, progressive KYB doesn't really work. If you think about our customers, when they pay salaries, you're immediately going to go above the thresholds that regulators will require us to check. So we have to work with the full set of documents that we're going to require based on the regulator's guidance. Now, we try to ping databases like DNB, Orbis, and our database in the US, but the reality is that more often than not, they need a lot of manual work to make sure that you uncover the data you need. There might be duplication in company names, there might be different SIC codes, there might be different outdated information, you name it, right? So if you do this augmentation, it definitely takes away from a friction point on the user end perspective, but it's definitely going to add some manual work on the back end that the company has to then cover to make sure that the information you're pulling is correct. There's no perfect solution out there, right? But if you try to go down the augmentation path, then there's definitely going to be some manual work involved to make sure the information is clean. And then if it's not clean, then go back to the customer and ask for updated information from them.
Yeah. And I like the first point that you made about the incentives, providing incentives for your customers or clients to provide that the documentation. It's almost like a sneaky way of like, here's a taste of our
You're,
product. All of this.
yeah, I don't want to say you're
If you
gamifying,
want it, if you
but
fully want it now, give us all of this
exactly.
information.
Exactly. But at that point, you make KYC not be a friction point, as in, oh my God, I have to do this
Yeah,
in order to even go on the platform.
yeah,
At that point, it's like, oh, okay, let me just have access to my money when I offer my information. And that makes it more in line with, if I open a PayPal account, I'm going to very much willingly give my information because I want to be able to to be able to send money to somebody. So if you have those kind of incentives that, hey, in order to access your funds or in order to do XYZ on the platform, then XYZ is always something crucial on the platform. That's really when you those kind of incentives is really what you have to have in place to make sure people go through KYB. Again, at eBay, it was based on how much you had sold and making sure you complete your KYC before you receive your funds. At Remote, it's often you're on the platform, you hired somebody before you actually make a payment, you have to go through KYB, which again, if you've hired folks, you really want to make sure that they're paid on time, their salary is paid. So at that point, you have a pretty strong incentive to go through the process of completing your KYC and your KYB so that your employees or contractors are actually paid on time and are happy.
mm,
It's a newer approach. It's a good approach, and I think it's going to be more and more done on this in the future.
yeah, yeah. And is this also applied for like customer onboarding? Because that can also be a process that creates a lot of friction for companies.
Definitely, and that's actually what we do currently at Remote. We had a customer onboarding flow that required a lot of information before we even started doing payments on the platform. And the reason for that is that for our EOR product, the employer of record, we are the ones actually hiring the employees through our entities, which means we have to make sure that the companies that we're working with are legit companies. Otherwise, we will be the ones on the hook for making payments to fraudulent employees. And that's not a place that any company wants to be in. So as you think about customer onboarding, again, is how can I ask for the minimum amount of information possible to make sure this company is legit, that they can go onto the platform and ensure they're happy with the services and user services, while also making sure that from our side, we are covered from a regulatory perspective, but also a fraud and risk perspective, right? Because there's we should not forget that yes, one is just what the regulators want, but two, those measures are there to also protect the company, right? Because if you're not checking, you open yourself to money laundering, to fraud, to risk, to chargebacks, to disputes that are going to be way out of line, and then you're risking your own company's livelihood and well-being. So it's always about, a risk-based approach, making sure you have the right tools in place to assess whether your onboarding works, doesn't work, ask more or less, test different approaches to find the right balance between friction and acceptable risk for your company and the regulators.
And a better experience overall for your
Of
users.
course, of course, of course, of course.
Speaking of which, we spoke about how things are from the client perspective, but if we switch gears a little bit and we look at it from an internal company perspective, a lot of these regulations are also creating, data control accesses. So
Yeah,
it's difficult for for different teams to have access to the same kind of information, and that is an inherent blocker when different teams have the same goal in mind and they're trying to offer the best possible experience, but they don't read from the same database, they don't have access to the same information about customers. And there's a number of those different teams in a fintech, like
yeah,
FinOps, fraud teams, compliance, KYC teams, support teams, like all of those need access to that information. And then at the core of all of that, you have the user experience that cuts through all different uh, teams, um, but they don't necessarily care. Like the users don't care, the clients don't care
yeah.
if your teams have to be siloed in a way. So how do you design for that? How do you create a better customer journey that does not have those friction points that your teams have to go through?
Yeah, and this is an excellent question because I guarantee you there's no company that does not face this problem. And the reason why this problem exists in the first place is that hindsight is 2020. You start with a product, you start adding more features and capabilities on it, you realize you have to collect more data for it, you realize you have to do XYZ more for it, you want to do some additional, add some more bells and whistles from a fraud and compliance perspective. And that creates a patchwork that is under the surface. It should be invisible to the end user or the customer, but internally the company is suffering. I can give you the example at remote right now, right? That you have what myself as the payments team, we want to see, payments data, number of payments we processed, money we processed, but also number of disputes. How often do we have reverse money movements and so on and so forth. Similarly, the fraud team wants to keep track of disputes because that's an indication that something went wrong with the platform and the checks. The KYC team wants to make sure that whoever we're checking does not lead to many disputes or whatever it may be, right? And then you have the customer support team that needs to have access to dispute data. If someone calls them and says, hey, by the way, my payment failed or this happened, how do I access this information? So you have so many teams that might try to access the same kind of information, but because of the controls you have in place, from PII data that not everybody can see, to data that is not relevant to everybody, it's just a patchwork that more often than not creates a very kind of manual process to pull data and extract data that you want, while of course adhering to the regulation and making sure you safeguard data, that you're not exposing PII data to anybody that does not have to see it. And the sad truth there is that this patchwork is inevitable unless you plan from it from the beginning, right? And that's really where the importance of, when you design a product, try to make it as flexible as possible. And it's very important when it comes to payment related products to work with folks and hire folks that have done this before, and know the pitfalls and the usual mistakes that come with growing a product that has to touch money and has to do payments. Now, if you design a system in a correct way, so you know what data you're collecting from the end user, how you're masking PII, how you're extracting data for different teams, and how you're augmenting data with what you have from public databases, then it's a much smoother journey, not just for the end user, but also for the internal teams. But this really needs a lot of high kind of level planning for the beginning. Otherwise, you're going to end with patchwork solutions that are just going to be detrimental to everybody involved. And there always comes a point that I've been with companies in the past, that you have this patchwork, it works, and you never make any changes. and at some point everything breaks, right? Either people cannot access the data they want, either the KYC database is down and people cannot complete their journey, whatever it may be, it's always going to happen. At some point, the patchwork is going to fail. And that's really where very strong product design comes into play to make sure that the end-to-end process from the data you collect to how the internal teams use them is a unified process with very clear owners, restrictions, data provisioning processes, and regulatory reporting processes. Because at the end of the day, you just want to be able to collect all relevant data, mask what is PII, and provision data to relevant teams that I want to see it. So the core of it sounds very easy and simple, but if you don't build it the right way, it can get quite cumbersome for everybody involved. And to your point, at the end of the day, this is detrimental to the end user, the customer experience. And if the customer experience is bad and the end user is not happy, then that, of course, is going to have a pretty negative effect on a company.
Yeah. So it's basically a patchwork that works until it doesn't work. And at that breaking point is when right. So if you haven't thought about this earlier on, is there any way to come back from it in terms of instead of creating this like Frankenstein process of customer journey of patchwork of new add-on features or processes that don't really communicate with each other? Is there any way back from that if you haven't done that from the get-go?
Yeah, I mean, at the end of the day, it's always about the other element that comes with the patchwork that I forgot to mention before, is teams trying to do a little bit too much. At some point, you have to know what it is that you're optimizing for on your platform and your product. It's very often the case that younger fintechs especially want to try a lot of different products to see what sticks in the market, right? But the more products you add, the more features you add, the more complex the infrastructure gets. At some point, you have to, if the patchwork becomes too big, you got to see what you can cut. What are you trying to optimize for with this product? And kind of identify what the extra fat is, and then start trimming that. So basically making it a little bit more of a more manageable patchwork so that you don't have to manage 50 different applications, but just maybe 10. So identifying what you're optimizing for really, and making sure that you don't have basically low usage features that are high impact on internal teams when it comes to how they manage the data is really the way to go there.
So focus on the core experience and make sure that you do that right. Got it.
You got to do the core things right, and that's pretty much it.
Great. Thank you so much for your time and insights today, Nico. I really appreciate your comments about localization, KYC best practices, and then the user experience. I think this gives our audience some really good food for thought. Thank you very much.
Pleasure to be here, and thank you so much for your time as well.
Thank you. If you guys want to learn more about fintech, check out our other fireside chats and download the ebook, and I'll see you on the next one.
And that concludes the CX Talks Fintech Virtual Fireside Chat with our guest, Nikos Theodorou. We hope you learned new insights that could help you overcome the new challenges in the fintech industry so you can be more future ready. Thank you for joining us, and please visit the CX Talks Fintech website to watch other discussions and read our companion ebook, Rethinking Fintech Customer Experiences. This has been Alex C. See you at the next CX Talks.